Hi, Kanan. Welcome to the Value Add podcast. So happy to have you here today. How are you doing?
Hi, hi, Manshu. Thank you for having me here. I'm doing absolutely fine. How about you?
I'm good, Kanan. Thank you so much for doing this. I would like to start knowing more about you. I know we have met a couple of years back where we were attending this workshop at Toastmasters, which was a English communication, workshop. But I would like to know more about you, Kanan. What kind of child that were you, and how growing up has been like?
So, if I talk about growing up, it has been through watching CNBC Awaaz television debates and the discussions around that. I come from family of around 8 chartered accountants. My father is a chartered accountant and he's a big stock market and real estate enthusiast. So that's how I've been raised up learning more and more about investing and money. So somewhere I believe that personal finance and investing comes in my genes, and that's what I've been working about since the last 15 to 18 months completely in this consulting space. And
Mhm.
now recently I ventured into an ed tech startup that is we are basically teaching people either free of cost or at very low cost on our website www.learnpersonalfinance.in. I have co-founded this with one of the very famous CA teachers. Like, I am also a CA. I missed out telling that. So one of the very famous CA teachers, Neeraj Arora sir. So yeah, I've co-founded that startup with him. Our journey is to educate the country around personal finance and investing. And what I did in between schooling and today is 5 years of 5 to 6 years of journey with KPMG and PwC, where I worked for them for close to 5 to 6 years and pursued my CA alongside my articleship at KPMG. That's a lot about me.
Beautiful, beautiful, Kanan. I would love to know more about it. I think let's just go slowly about personal finance. And I know this has been one of my areas, personal interest of subject. Not because it's a fad right now, but it also because how much it helps and add value in our own life if we learn the skill of managing and our personal finances
Yeah,
very early in life. So one of the areas, where traditional education system, Kanan, has really failed us, I would say, is teaching us personal finance, right? Why do you think it should have been taught to us early in life, and why? That's first question.
absolutely.
And
Yeah.
what are the merits, according to you, of learning finance early in life, and the risk of learning finance, when you are in your late 20s or early 30s, or even beyond?
Yeah, so I'll just give you a quick example around this. So since when have you been learning English per se? Like, have you been? Are you from a English medium school?
Yeah.
So, right, it would have been very easy for you to catch up English in the later years of your life, right? But
Right.
if I talk about the same for a person who has been raised up either in a Hindi medium school or even with no schooling, it would be very tough for him to understand English, right? And if we talk about French, like if we would have been raised in a French medium school or where we would have been taught French right from KG nursery, we would have been doing very well in uh, French as well. But having said that, learning French is not that important. Learning personal finance and investing is more important because it forms a very large part of our lives, right? Of course, we have other things as well, but everything is related to money, right? Even when you're getting married, you need money. Even when you're traveling abroad, you need money. To raise kids, you need money. To retire, you need money. To fund your kids' education, you need money. You need money for buying your house or even renting it. So
Right.
doing it in the most optimum manner will really make wonders if we learn it the right way. And if we start inculcating a habit right from our childhood, then that's going to do wonders for our country as a whole if we can incorporate a system like that. Unfortunately, that's not there right now, and money is a taboo topic to talk about, but we really want to change it, and that's what we're here for.
Let's talk about as you spoke about money is a taboo. We have all heard about not discussing things like salary in our corporate careers. We have not been asked as a society, and especially for men, right, to disclose their salaries. Do you think it comes from there, like those sneakily remarks of that money is evil, and
See, everything, let's not talk about what's evil and what's not. But if I talk about salary only, that's not what I'm talking about. Basically, that can be a confidential information as well. I might not want to declare whatever I'm earning in assets or, whatever things to my relatives, because they can any day come and knock to my door ki mere ko paise chahiye.
Right.
So that's absolutely fine. Keeping your income statement, your investments confidential. When I'm talking about money as a taboo topic, then people don't discuss about investing so openly,
Mm.
right? The maximum they'll talk about investing is either through a real estate property. That's it.
Yeah.
That's what I've seen people talking about. But after, we have seen so many scams in our equities market around investing. So somewhere or the other, that confidence in the generations of our fathers and forefathers is a little shaky, because they've lost their life savings over there in Harshad Mehta scam, or even Ketan Parekh scam, or even other bubbles that came and went by. Some of them invested in futures and options and they lost their money. So
Right.
that's why equity investing per se, if not money, is definitely a taboo topic. Somewhat that has got erased in the last few years ever since the pandemic. But again, it still is, and we need to change that thing.
Yeah, I think it's both a lack of awareness as well as you mentioned that it's a stigma around it. The stigma
Right.
comes from the bad experiences of the past, of the history, and most people, as you said, they've lost their fortunes, right, while investing into equity markets. What is the importance of starting early, in your financial planning journey? Karan?
Before going to that question, I would also like to say many people have made fortunes as well. Like, even if I don't talk about someone like Rakesh Junjunwala, who started with 5,000 bucks and ended up making 50,000 crores. I'm not talking about him, but as linking, as you just said, what's the importance of starting early in your life? So it's very easy. There are many calculators given on our website also. You can check it out that's a free Learn Personal Finance community that you can join on our website. You see, if you change the number of years that are there, right, for your investment horizon.
Right.
Like if I start at 25, right, and I start investing 20,000 every month,
Right.
and like if my salary is say 1 lakh rupees and I save 20,000 and I put that amount in SIP, which yields me an SIP in equity mutual funds, which yields me somewhere around 12%, right? So I'm starting with just 20,000. That's 20% of my income.
Right.
And with every salary year increase, assuming that is 10%, I keep on increasing my SIP till the age of 60. Just guess the amount that I'll make. Just guess the amount that I'll make by the time I retire at the age.
It must be in crores.
Yeah, definitely it's gonna be in crores, but like 5 crores, 10 crores, 2 crores, 1 crore. What's your number?
10 crores.
It's 35.2 crores.
Yeah.
So yeah, so that's the thing. You see the benefit of starting early.
Right.
So, and I'm not talking about any magnanimous number like start with 50,000 a month or start with 1 lakh a month.
Right.
But the more you delay it, the more it's gonna get tough for you to accumulate that kind of amount. So that's the thing. If you start early in your career, things are gonna be very easy for you. Whereas if I talk about, say, at the age of 35, if you start at the age of 35, I just talked about starting at the age of 25, right? And we talked about a corpus of 35.1, 35.2 CR. Right. Just assume if we are doing at the age of 35, you know what the amount will be. Just guess it. Like for 25, it's 35 CR, right? So what's going to be that for the period of 25 years when I'm starting at the age of 35 and retiring at 60? And just give me that amount if we start with the same figures.
Must be much lesser than 35 crores.
Still, just a guess number.
15 crores, 10 crores,
8 crores.
8 crores.
You know the logic behind that. So you look at the formula of compounding. It's 1 plus R whole raised to the power T. So T is time. Time plays the most important role. Of course, rate of interest, that is R, is also important. But we place much more importance to R than we place it for the time invested. So for longer period you are going to stay invested, the longer, the better will be your probability of making money out of the stock markets.
Yeah,
So
I'll
that's what.
stop you there, Kanan. Let us demystify compounding, which you touched upon, for the viewers watching this podcast and the listeners listening to this. Let's just demystify what compounding is. How does that actually work? And what if how does basically compounding play a role in your investing journey?
So what happens is, Himanshu, say for example, let's not talk about 12% for the sake of simplicity. Let's start with an example of 10%, right? So if I'm invested with an amount of say 1 lakhs for 1 year, then my capital appreciation is around 10,000. 1 lakh, 10% rate of interest or rate of appreciation on my equity mutual fund balance, I get 10,000. For the next year, my balance is going to be 1 lakh 21,000 and not 1 lakh 20,000. That is
Right.
10,000 above 1 lakh 10,000, because I am also going to earn something on 10,000 that I already earned in the first year, right? So in the second year, it's going to be 10% of 1 lakh 10,000. In the third year, it's going to be 10% of 1 lakh 21,000, and it moves on. So you see, in the first year, the amount is very minuscule. That's just 1,000 more or 1% more of the initial capital.
Right.
But as you increase your time horizon, this this additional compounding effect will be more than 100% of your capital if you stay invested for a certain number of years.
Right.
And so that's the importance of starting early. I think I couldn't have explained it better, because that's how compounding works for you. So that's all you need to do. Start today, right from the top, right from the moment you're listening to this podcast, right after closing this podcast. Start today if you haven't done it yet.
Yeah, there you go. I think the key concept over here is time, and how does that beautifully work. And I think it's not just limited to personal finance. If you would continue to invest in any good habit, let's say over the period of time, and you compound it over the period of time, right? You get to see those results.
Absolutely.
Like you reap the benefits and you reap the fruits of all the hard work and efforts that you put in down in the years of building any skill. So I think just to add a layer to what you were saying in the context of personal finance, I'll add it to more, because I see my entire life as compounding, right? So any skill that I want to build, I give it at least 5 years, minimum 5 years to build that skill. And once
Great.
that skill is built over the period of time, you know that it has worked, right? So I think that's what, but beautifully explained. I would like to touch upon retirement. We have whole notion about this fad going on that start early and retire early in 30. Where this jazz is coming from, and what is this all about?
So, see, I'll tell you this thing, start early, retire early. First of all, you need to understand that it's worse when you don't have work, right?
Right.
Of course. So, accumulating a good amount of corpus in your initial years is always wise. What that corpus can help you with is to shift to a job where you are not going to slog for more number of hours. That's my personal view. Of course, you can retire as well if you want to. If you want to travel the world and if you like traveling, then why not? That's absolutely fine. But for most people, you're really gonna get done with traveling in just 1 year or even lesser than that, and you would definitely want to work again. So of course, that's one thing. And if you don't want to retire per se, and if you want to start up, then that's a wonderful idea, right? For retirement, again, as I said, it might work for someone, it might not work for someone, because they'll ultimately have that sense ki yaar kaam bhi to karna hai. But otherwise, if someone wants to start up, right, and they want their expenses to be met, like without their salary kicking in every month end, right? So how do they do that? They build some passive source of income. They build a corpus which they can, maybe either they can get interest out of it or they can redeem it on a regular basis, and they're just fine. That by a certain number of years, if my experimentation doesn't work, I have sufficient corpus to take care of my family and myself.
Right. So just want to double click on that, Kanan. I think a lot of people who start into their investing journey, and most of this is coming out of FOMO, right? Especially these days. that everybody has been investing, and this entire trading into equity markets and investing into equity markets has started actually in India from 2020, when the entire nation was locked down into their homes. And now they wanted to explore other avenues of income. And trading was one of the safest bets for a lot of people out there. And a lot of people fell into a trap. Just the same thing what you were just talking about a moment ago, that a lot of people doesn't have a primary source of income, yet they keep on investing and trading. Is that a risky thing?
So I just come back to from where you started.
Yeah.
Like if we are talking about this FOMO thing, no, of investing. So investing and trading are two different things. Investing is something that you invest in and then you wait for compounding to help you. Trading is something that you do every day to earn a quick buck, right? So that's the difference between investing and trading. So I am a fan of investing and not trading, because I believe that if I invest in my business or if I invest in myself, my skills, I can earn more than I can earn on trading, right? Trading from futures and options or even swing trading and everything.
Right.
So even if I have a 1 CR capital, and if I lock my hours from 9 a.m. in the morning to till 3:30 in the afternoon, maybe if I invest that time in learning more and more stuff right around my field, I can earn more than 20 lakhs a year. That's my personal assessment. It might be different for you, or you might think you might be able to earn more on your capital, right? So my limited 2 cents around it would be just do it for 1 year on not a very sizable capital, some capital that you won't mind losing. Like if you have 1 CR, you won't mind losing 1 to 2 lakhs, right? So trade on that. Don't get in the recency bias that if this particular Telegram channel has told me, yeah, buy this particular trade and it goes up, iska to sara sahi jata hai, 5 bhi trade sahi chale gaye. You can't risk your life savings on that particular advice. Just test it for a year. If it's working for you, then gradually increase that size. Otherwise, don't. And having said that, just let me make this quick disclaimer. All this that we are talking about is just to educate you, and nothing like this should be construed as any kind of financial advice or investment advice as per the SEBI norms. If you want to take any investment decision, do your own diligence and do consult a SEBI registered investment advisor if possible.
Absolutely noted. I think what you spoke about, the difference between trading and investing, a lot of people doesn't know that out there, right? Who start their investing and trading journey, and they watch a couple of YouTube videos, they watch a couple of read blogs, and they start on their investing journey, right? That's one of the scariest things.
That's dangerous. That's absolutely dangerous, I believe. And that's the problem we are trying to solve, right? We are trying to educate people around financial products and, so that they invest in the right possible manner. If they want to select mutual funds, then we have a small club on mutual funds. If they want to learn more around fundamental analysis of stocks for investing, not for trading, then we have another club for that. And we are not charging any bomb fees for that. Like nothing like 5,000, 10,000. It's a very nominal price that everyone can, pay and listen to. We are charging only so that people listen to it attentively. They don't joke around and, just subscribe to it and never listen to it, because even if they pay a small token amount, like $1,000, that's what we're charging. They think they have some ownership over that particular learning process. So that's what our idea startup is around.
Sweet. I think that's such a wonderful initiative by you and Neeraj, sir. I would love to change gears a bit over here, Kanan, and would love to understand your journey with money, how your relationship with money has been like. Has it always been, have you been a saver or have you been a spender? Let's talk about your college times a bit, or even if we go before that.
So I've never been to college. I straight away, right after doing my schooling, I started doing CA. So I was a very strict saver back then, and I would not call myself, if I look back today, I was not a saver. I would say I was a miser back then, right? But now I have thoughtfully moved, transition from a miser or maybe a saver to a thoughtful spender, right? And see, I have to plan for my future, right? Till the time I retire and what happens after that. As long as I'm meeting those goals, right? It's fine. Like if I need 1 CR in the next 10 years, and if I'm investing optimally for that, it's fine. If I'm not, then I can't spend that amount at least. So if I'm thoughtfully preparing a financial plan, it's working according to that, I'm sorted for life. But yes, what you can do is, if you are a frugal person, not a miser, so there's a very thin line between frugality and misery. So once you're a frugal person early during the early days of your life, you're going to be much better by the time you reach 35, provided you do good investments. Because if you keep on investing in defensive instruments which don't yield above inflation rates, you're not getting rich in real terms. So that's also what you need to think about. Even if you are if you fight for every penny and you're investing that in the wrong instruments or the wrong shares or the wrong mutual funds, you're not going to get anything out of it. That's it. So it has to be a balance of consciously saving and spending, and then investing in the right instruments.
Yeah. Which takes me to a next question, Kanan. What according to you, and what is, I would not say advice because advice can be subjective. Let's use, for the lack of a better word, let me use, what is your recommendation for somebody who's starting their financial planning journey and their early 20s? What are some of the things that they should be doing?
So invest in what you understand. That's the first thing. So, but again, you need to learn about different things. Like if I talk about myself, right, I understand equities. I understand debt instruments like PPF, Provident Fund, Employee Provident Fund, and other things. I invest in them. I am not against crypto, but I don't understand that, so I don't invest in crypto. As simple as that. Once I start understanding it, and if I develop a favorable conclusion about it, like yes, there's a possibility that it can go up, and since it is volatile, it should not constitute X percentage of my portfolio, then I'll go ahead with it. But just because your friend is saying it, don't go by it, right? Because your friend is also very early into this journey. You need to have someone who has got years of experience, or either learn about it, right? So if I talk about myself, I've been learning about investing in personal finance right from when I was 10. My father used to teach me about Warren Buffett, what he did, what he didn't do. And then since the last 1 year, I've been very close to him, understanding thoughts like never before. So I have a person with me who has invested, who has seen the cycles and everything. So I've inherited that kind of knowledge. So that's why I think passing it on is also a responsibility for those who don't have it. That's what exactly we are doing at Learn Personal Finance.
That's amazing. That's amazing. So I think when it comes to equities, or what are some of the instruments, I would like to ask that, people in their early 20s should look at while they're thinking about their investing journey?
So either it can be through equity oriented mutual funds, right? It can either be a passive fund like an index fund, or maybe other funds like a flexi cap fund or a mid cap, small cap fund, depending upon your risk profile and your availability of funds. And other equity instruments can be your direct equity instruments that you can purchase from the stockbrokers like Zerodha Stocks or Grow. Right. So there, maybe you can, if you have so much conviction about Hindustan Unilever, or if you have any conviction about Kotak Bank, then you can directly buy those shares rather than investing in them through a diversified mutual fund where they have around 80, 70 investments at once. So yes, this is about equity investments. But yes, all these things, even when you invest in mutual funds, even when you invest in equities, direct equities, you need to have certain kind of knowledge for that. So while don't delay it so much till the time you acquire that knowledge, keep on investing in an index fund. And again, not investment advices for educational purposes. Don't delay this journey. Kindly try and fast track it, and do learn about it, like about mutual fund investing and fundamental analysis. It's going to be a very rewarding journey for you. And that's the limited points that I wanted to make around someone who's going to start early.
I think that was very helpful and useful for the viewers who might be watching this and the listeners who would be listening to this podcast. Cool. Thank you so much, Kanan. It has been great speaking with you and learning insights about your own journey. And I believe anybody who's watching this podcast on YouTube and listening to this podcast would highly benefit from this. Tell me more about where can people find you and more about your book. What are your handles and
yeah,
you can find on
yeah. So we have a digital real estate, that is learnpersonalfinance.in. I'll give you the link. Maybe you can share it in your description. And then I have my LinkedIn and Instagram ID. If anyone wants to connect, I'll be happy to connect with them.
Awesome. Thank you so much. I'll also pin it down, all your handles and your website in the description as well. For somebody who's interested in learning more about finance and getting the courses, Kanan and his partner Nitrite sir has amazing courses on their website. Please do check them out. Link that is mentioned in the description. Signing off, Kanan. Thank you so much for doing this.
Thanks, man. Thanks for having me here.